That brings up an interesting point here, Andy. It really, 24 was eye-opening in many ways, but one of them was that, come on, we had nominally at least, record all-time high after record all-time high, monthly closes, what was it, 8 of them at record all-time highs.
Lobo Tiggre, Independent Speculator. How are you doing, my friend?
Well, I've been out kicking rocks in the field, which is one of the most fun things about what I do. And I've been missing it because I've trained up a team of really smart guys who could do it now as well as I can, or maybe better since they're younger. But every once in a while, I just got to put my boots on and get out there. So I'm in a good mood today.
Well, welcome back home to where you're at right now. I won't name drop where you're at, but it's warmer than where I sit here in Atlanta, Georgia. So, gold, I want to start with gold. Gold's been in the news for justifiably so. It's been in the news, been really hot for really a while, but especially the equities since the beginning of the year. And then really since, I would say mid to later January to the present time, they've been really, really hot. And, I actually took some profit off the table here. I still have a lot of investments, but I just want to know what your thoughts are on the gold market, why this run up, where we're at, and then all of that sort of thing.
All right. So big picture, my top pick or my call for 2025 was actually copper, not gold. For reasons that I think your question hints at. We had a great year in 24. And by the way, gold was my top pick for 24. That worked out really well. If not for the reasons that I thought, it still worked out well. But yeah, we had quite the hockey stick for gold in 24. And so just on that base, that's great. I'm a happy shareholder and gold hodler, if you will. But, it's to ask for another hockey stick after the first one, that's a big ask. It's a much bigger ask, which is part of why of the metals I'm most bullish on, I went for copper because it was relatively cheap at the time last fall. We've seen a move in copper already too. But at the time, it just seemed to have the more hockey stick potential, and a double hockey stick out of gold or a continuation of not real all-time highs, but nominally at least all-time high after all-time high in 24 that was a big ask. And, the odds are always some kind of correction in order after a hockey stick. That said, as you and I speak, my thinking on this has evolved here at the beginning of the year, not just because gold has done well. The stocks moving is really quite something because they really underperformed as a group, as a class on average in 24. So to see the stocks really responding with more gusto this year is, I think, quite an important market signal. But it's not just that; it's actually the underlying commodity itself. Gold is acting like money. It's responding to financial and geopolitical headlines as money should. Gold is a inflation hedge. Though if you correlate it with CPI, that correlation is terrible until recently. So it's really interesting that gold doesn't pay interest and all these old tropes. Higher inflation prints in recent years have whacked gold. It makes the gold bug want to pull his hair out, what hair we have left, because it's just like, it's the history's greatest inflation hedge. And for some reason, traders want to sell it off every time. We don't need to go down the rabbit hole of those reasons. It's market conditioning. It's the Fed put. It's all this stuff. But that broke down. And recently, and it's not just one print, it's the last month and a half or so, we've seen gold either rallying on high inflation news or simply not being knocked down for long or at all on inflation news. So that is a change. This is a difference in the market from what we've seen in recent years. So given that my overall macro outlook is for higher inflation, and we can talk about that if you want, but I don't think I'm alone on that. Most people, red or blue, see Trump's agenda as inflationary. And the world, of course, has its own, inflationary challenges. Anyway, so if my outlook is inflationary and gold is now responding positively, or at least not getting knocked down by inflation, plus the central bank buying and all this stuff, like maybe not another hockey stick in 25, but that correction that I feared after 24, my wolf whiskers are not twitching on that. I don't feel that as as a clear and imminent threat. It's a possibility. You hit a nice big round number like 3,000. It feels like gold wants to hit 3,000. You hit that number, and that could trigger a lot of profit taking. You yourself just said you took some money back off the table. So, that could be the thing that triggers the correction that, market watchers would expect. But it could also be the thing that triggers a flavor of the day. And just the headlines on that number would be quite eye-opening. And the Johnny-come-latelys piling in, that momentum chasing money that, went after cryptos and then pot stocks and NVIDIA or whatever it is. If that catches the win for gold, we could see a really binary outcomes this year. Meanwhile, I still like copper, but that was a mouthful. Sorry, but there's a lot going on with gold, and my latest thinking has changed from where it was a couple months ago.
Yeah, no, thank you for that. As said, I took some profits here, and for the first time, I am questioning that. Well, not really. It's hard to feel bad
You
about
never go broke taking profits, brother.
right?
Yeah.
And then you just redeploy it to other assets that are beaten up, which we'll get to in a moment. But that being said, I still have a lot, and it does, and I hate to use the word feeling, but I will say feeling. It just feels different. It is just a really strong. You even mentioned it just on all the daily or weekly prints. It gets smacked down, but it's not really smacked down. It gets rebought. So I haven't seen that, and I don't know when. It's been a long time. So
Yeah, just to put some numbers on it, when things started looking toppy for gold, if you will, we were looking at 2,700. That was more or less when, it had gone way above 2,500, which was many people's target. Things, the hockey stick. So you started feeling nervous about gold maybe having gone too far too fast, or I did anyway, and other people whose judgment I trust, around 2,700. And it waffled sideways for a while there. Well, here we are well over 2,900, and it's sticking. So I do perceive a change in the marketplace. I'm sorry, I don't have the crystal ball to tell you, whether the next, big number is going to be 3,500 or back to 2,500, but interesting stuff happening. And there are opportunities for disciplined speculators out there.
yeah. Another thing is too, even those stocks, especially the juniors, the market that we dabble in, and I also have majors just for the record. But that being said, they've caught up some to the price of gold, just in the last 4 to 6 weeks, but yet they still have a ways to go. If you just look at valuations, what they have in the ground, and that sort of.
Yeah, that brings up an interesting point here, Andy. It really, 24 was eye-opening in many ways, but one of them was that, come on, we had nominally at least, record all-time high after record all-time high, monthly closes, what was it, 8 of them at record all-time highs for gold. And many of the stocks did nothing, just couldn't pick themselves off the floor. And that's basically never happened before. When you've got the metal, the underlying metal, and this isn't unique to gold, but any commodity like this, why do we even bother with these crappy mining stocks, as Doug Casey likes to call them, right? Because they give us levers to the underlying metal. And if they're not going to do that, why would you take that risk? Just buy the metal. So it was a real eye-opener that we really ought not to dismiss. Anybody, from newcomers to metals and mining to seasoned professionals, the market sent us a very unusual and clear signal last year. And so I find myself interacting, particularly with the veterans, that like, the rising tide eventually lifts all ships. Well, it didn't in 24. That doesn't mean it won't. Like if gold hits an actual, at least according to CPI, all-time high, we're looking at 3,500 almost. Within a couple bucks at 3,500 at the moment, according to the BLS. I think that would obviously provide a big tailwind. I think the headlines would be gonzo, and I do think that would create a lot of interest. But we actually had that in 24, and a lot of these stocks didn't respond.
Right.
So I just think, maybe they do this time, but maybe they don't. Do you really want to bet the farm on something? Okay, historically, that's been the way it's played out, but we just saw that it didn't this time. So long story short is I'm seeing this very much as a stock picker's market. So I'm very bullish on gold. I'm even more bullish than I was a couple months ago, but I'm not buying an ETF. I'm not buying the GDX or the GDXJ, which is a misnomer. They're not juniors. right? And even amongst the juniors, the rising tide has still not lifted all ships. There are some out there that still can't pick themselves up off the floor. That's telling you something. So the better stocks have done and did do better than gold in 24. So I think we can outperform simply by avoiding the worst stocks. And some of those are pretty obvious.
I couldn't agree more. And I say that just an example. Recently, I bought a company that was in the beginning of the year and they didn't get a bid. And great run, great assets in the ground, blah, 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 blah. Decent jurisdiction, but I feel like I'm being compensated for the jurisdiction. That being said, they didn't go up like the other ones did. So I couldn't agree more. I don't think you can just buy the market. I think you
Yeah.
have to buy the market with good name. That's what I think you have to do. So
Yeah. And especially, and people say, well, gee, Lobo, aren't you nervous being a bull at all-time high prices? Well, if I was just saying, buy, hitting that big red button that Kramer has on TV, right? Buy everything gold. Yeah, I think I couldn't do that. I would feel very nervous saying that. Whereas if I'm saying there's an opportunity here for stock pickers to place bets on the better operators or the better, the people that are actually building the gold mine, they've got the permits, they've got the money, the shovels have already hit the ground. They're actually adding value on the ground, real time, right? Or the juniors that actually have a discovery of merit that this could be a mine. It looks like a mine, right? I feel much less nervous about that.
yeah, got it. So hey, let's talk about copper. I'm embarrassed to say I somewhat missed this recent move up. But I've been a very long-term bull.
Dude, you shouldn't be embarrassed. That's almost a badge of honor. Nobody can time a market bottom.
Right.
So and really the move we've seen though so far this year, I think has more to do with geopolitics, Trump's tariffs and things than the actual fundamentals shifting. We actually have seen the resolution of some of the bottlenecks on the supply side. We've seen some big deals on the copper supply side. I don't expect it, but it is possible, especially if Panama got their act together. But we could actually see a rebalancing very near term that would be bearish for copper prices,
Yeah.
bullish for the industry, but bearish for copper prices. But we also have, Trump's tariffs and who knows what. So um, I don't think you did anything wrong. If there's um,
Thank you, because I do have a thesis, but I didn't tell you, and this is what I tell myself and anybody that ever asks for my opinion. It's okay to miss the first move. In fact, it's often very normal, but you want to hit the second move because everybody jumps in on the first move and then you have to recorrect. So I'm actually hanging out waiting, but I'm very interested, very, very bullish on copper. And I'm glad that you share that opinion as well. And I want to push on that, meaning work that out for me. Why are you so bullish on copper? Why is that your favorite pick this year?
so as I said earlier, I mean, basically my outlook is inflationary. So that makes me bullish on all commodities as a
Mhm.
class. But there are some that are facing, very strong headwinds. The problems in nickel space are huge. I mean, we've got Indonesia just pumping it out like there's no tomorrow. And so even if we have an economic rebound, even if, the money helicopters fly and we have more inflation and so on, the supply is so huge there that might not be enough to lift the nickel ship along with everything else. And lithium's even worse. Um, in Argentina, I just saw a DLE plant, a direct lithium extraction plant that the locals told me was making money hand over fist. And that's really striking because this is new technology that's really being applied commercially. We've seen it coming. We've been writing about it. Yeah, show me, don't tell me, right? It looks like, the French are in the process of showing us right now. And that's really huge because the cheap way to process lithium, sorry, just real quick on this. The cheap way to process lithium has been for many decades. You build an artificial lake, line it with plastic, put your brine solution out there. The sun does all the heavy lifting for you, evaporates off all the water. You scrape off your lithium salts and clean them up a bit. So really cheap, low cost. But to build that artificial lake, it's a couple kilometers long, right? I've seen pans 5 kilometers long. It takes a couple years for the sun to do that work for you. It's free, but it's slow. Whereas with DLE, you're just pumping. It's like an in situ uranium recovery plant or something. You're just pumping it straight out of the ground into your plant and getting the lithium out now. So if that's working, there are a lot of assets out there that this could be applied to. Meanwhile, the Chinese have been boosting production. There's just lithium was never rare. It was a production and bottleneck issue. So even if the economy rebounds and even if people decide to buy EVs like, they're going out of style, which they kind of are, maybe.
All right.
But let's say that the EV market just booms this year, right? There might actually be more than enough supply.
Mhm.
So I'm not indiscriminate. I'm still looking at which things are actually going. And this is the other answer to your question with copper. I talked about, inflationary is good for commodities. I talked earlier about copper hadn't done quite, a hockey stick anytime recently. So it had more upside just on the basis of price.
Mhm.
And then there's the structural supply constraints. And it's not like lithium. It's not like nickel. It's not like some of these others. This is one that, even if the low hanging fruit this year manages to balance the market somewhat, I think that's a worst case scenario. I'm not actually convinced that will happen at all. My base case is actually that we'll still see supply shortfalls this year and prices, higher on that basis. But if that does, it's very short term. Now, to the way we started this with, and that's all the more reason not to beat yourself up over not having bought the bottom here. Because between who knows what will happen with the tariffs, like maybe Trump cuts a deal and there's nothing on copper, then all that scare goes away. And to the degree that jacked up prices, in the first month or so of this year or two, right, that goes into reverse, right? And suppose, some of these other developments I've talked about on the supply side, suppose, it takes a while, but suppose Panama even just announces we've got a new deal and we're welcoming our copper miners back, right? That would hit spot prices immediately.
Right.
I think there's plenty of turbulence immediately ahead that makes a disciplined speculator say, you know what, maybe there's a bargain hunting opportunity here. And bottom line, let's say I'm wrong and there is no, that was it. That first move that you talked about is done and now you don't want to miss the second one. Let's say that's it. If that's so, we're looking at a multi-year, really multi-decade structural supply constraint in copper. The copper just isn't there. Yes, at higher prices, some lower priced or lower grade deposits might work, but they're not built yet. They haven't even hit shovels, right? So, and if they do work, they'll be higher cost operations. So it's not like high prices will cure high prices. In that case, high prices will just rescue a few stranded assets. So the bull thesis here I think is so solid and so enduring that I frankly couldn't care less about where the bottom is. Let's say, it's wrong. I've missed it already. It's going up from 470 and it's just going off from here. Well, with the years ahead that I expect to be able to make money on copper, I'm fine with that. When that's obvious, I jump on the train. Okay, it's already left the station. I've got a fast horse. I catch up like in a cowboy movie, right? And I jump on the train. I still make tons of money before we get to the destination. But if I'm right, and who knows with the tariffs and the near-term supply questions, if I'm right and there's lower prices, substantially lower prices, say there's a big scare, right? Suppose the tariff story goes completely into reverse and copper drops back under $4 again. Well, there will be some terrific buying opportunities in the space. So that's my view. It's like, if I'm right, I get this buying opportunity, I load up on copper and off we go. If I'm wrong, okay, I missed the bottom, but I still make money because there's a long-term bull. So why would I take the chance on a 30 or 50% haircut on the stocks this year or the near term if that volatility plays against copper in the near term?
Yeah. In fact, the way you were setting it up is you're actually, with that mindset, your volatility is your friend almost.
Yes. Another Doug Caseyism. I remember writing a report or something with him. I remember it was a report or an article or an edition that we did, but make volatility your friend. And I still use that catchphrase.
Yeah. No, that's fantastic. I just remember back in my younger days when I was trading a lot of money for other people's money, we used to use that all the time. Is make volatility your friend. Speaking of volatility, actually volatility to the downside. Last time we'd spoken, it's been a while. You were very bullish on uranium. You were talking about the shortages in the uranium market. And uranium, I've started to nibble, and I'm about to go pretty significant here just because it's hard for me to see. It's hard for me to understand why uranium's at the price that it is. I don't want to put any words in your mouth, but well, I'll just say I am becomes uber bullish here. Again, that could go on for who knows how long. Meaning,
Oh, well, Rick Rule agrees with you. Actually, I haven't asked him specifically about uranium like in the last couple of weeks, but this is my other mentor, Rick Rule. This is one of his main themes, his main refrains. I love hate. Hate makes me rich, right?
yeah,
This is a classic Rick Ruleism. And uranium is starting to get hated. I'm starting to get pushback on Twitter, X, sorry, Elon, in social media. If I mention uranium, then the hate is coming back. It's like 22 all over again, where
yeah,
people are like, but uranium, it hasn't gone anywhere for 9 months, and you laugh like 9 months is somehow important. Right? But there was so much hate that made late 22. By the way, 23, my top pick was uranium. This year it's copper. Last year it was gold. Before that it was uranium. 2 out of 3 have worked. Let's see if copper continues to deliver this year for me. Maybe it'll be 3 for 3. But it was so hated and the use case hadn't changed at all. I mean, another Rick Ruleism, either the uranium price goes up or the lights start going on in certain parts of the world. So fast forward to today. It feels like that. And I absolutely get, as a contrarian, why you would see hate as an opportunity or the low prices. But a bit like copper, let me be very careful here. I remain, dear audience, very bullish on uranium. I'm not backing off uranium and say, forget uranium, it's done. But, but, um, there is something new here that wasn't on the table before. And that is Trump is talking denuclearization. He's talking about a 3-way treaty, at least, with China and Russia. And, the old thing about we've got enough nuclear weapons to destroy the world 100 times over. We don't need any more nuclear weapons. Now, so far, this is just Trump talking. There isn't a policy initiative. I mean, he's saying he wants to have a treaty and so on. Um, but if you do that, if you start decommissioning old nukes, what do you do with the enriched uranium? I mean, it's not something you just want to leave lying around.
yeah,
If you don't actually de-enrich it, it's weapons grade uranium. You really haven't denuclearized. It's ready to go back into weapons again. So to really denuclearize, or to step back from accumulating nuclear weapons, you need to reconvert that, downblend it, as we did before, the megatons to megawatts program, which absolutely clobbered uranium prices for decades,
yeah,
really. So there is now a new risk of secondary supply that could have material impacts on the price of uranium. Now, this hasn't happened yet. Like, Trump hasn't even talked about megatons to megawatts, but just the idea of scaling back the nuclear weapons has this sort of logical corollary, which is worth considering. Now, even if it does happen, how long till we negotiate a treaty? How long before they start doing it? How long before the downblended uranium actually hits the market? Like, reality on the ground, I don't think even in the worst case scenario changes in less than, let's say, 5 years or something. I mean, it will take a long time for this to make a material difference. But the spot market, you know, people always like to say, "Oh, who cares about the spot market? It's the long-term price that counts." Yeah, well, our share prices in our companies respond to the spot market, so you can't ignore
mhm,
spot. And if spot or if traders see this threat coming, and markets are forward-looking, they price it in advance, we could see spot go much lower than it is now, much lower than I expected. This is another new thing, Andy. I was not thinking this way at all just a few weeks ago. Trump talked, tough and pro-military and, so to see, and Trump himself tore up a nuclear treaty in his first time in office. So this is
mhm,
pretty unexpected by me that he would talk about seriously reducing nuclear arsenals. And so I won't go on forever on this, but there's another thing is like, even if they announce some kind of deal or some intention, you could retire old nuclear weapons and build new ones. I would absolutely, just categorically not believe Putin or Russia, if they said, yes, we're going to reduce our nuclear capabilities, they're not going to do that. They might, decommission old weapons and build new ones. Their new Kinjal missiles and, their hypersonic missiles and new higher grade weapons. And by the way, fusion bombs take less uranium than fission bombs, is my understanding. So I could see a world in which there's no actual peace dividend. There's no actual, stepping back from dangerous nuclear confrontation. But it remains to be seen. This is something that could whack uranium prices. That was not on my radar just a month or two ago. It is now. I'm not saying sell, sell, sell. I'm saying this is worth watching, Andy. This could be a game changer in the uranium supply space if it looks like it actually is going to happen. So we need to watch this closely.
Yeah.
To answer the question, sorry. So am I backing up the truck right now on uranium stocks while uranium's down? Well, if you'd asked me 2 weeks ago, I probably would have said yes, maybe 3. Now, I'm being more careful. I'd like to hear more about this and see if this really is a priority of Trump's, if it goes anywhere or not.
Yeah. Again, we can wait. We can wait and see what happens then. This is one of those times we don't have to pick the bottom here.
There is a danger. Like if they make some big announcement and spot goes down to $40 or something overnight, that would be painful. But I don't think so. And actually that might be buying. There could be, let's say, even if this happens and there's going to be a downward trend for uranium prices in the future as megatons to megawatts actually comes together, the utilities still need to fire their plants. Like the demand in the near term and the long-term contracting is still going to be there. So I could see a situation in which headlines create a big scare in uranium, spot price just tanks in a way that's not real. Like you can't get any significant pounds to fuel your reactors at those prices. And then you could see it in a situation where the long-term price wrenches that spot price back up again because it got oversold. That could create an interesting contrary, countercurrent to this whole thing. So anyway, I don't know, if I ask my magic 8 ball here, where's uranium going next? I don't know. I'm just trying to level with the audience here because I have been so bullish on uranium. Something has changed in this market and we need to pay attention to it.
Yeah. Well, I'll tell you what, if we go to $40 spot, I'm going to back up. I would be.
I might just be there with you, brother, because it would seem overdone. Yeah. But we need to do it with our eyes open. Like I'm not going to set that as a price target now.
Yeah.
When it happens, what was the news that triggered that? What does it mean? Right. And how real is it? If it's just talk and hype, that would create a buying opportunity. If it's no, Elon is already converting to weapons grade uranium to reactor fuel.
Yeah.
That would be different.
Yeah. Well said. Okay. So I guess to leave our audience here, what were some thoughts you would have going into 25? I know we're 2 months into 25, but what's your big theme? It's obviously copper's one of them, and then the stock pickers market. Anything else that you'd want to share with the audience?
Well, those are my main themes. Also, gold and by the way, silver, which still is a monetary metal.
I wasn't going to ask you.
Yeah, I have my Darth mask around here somewhere, but no, I'm bullish on copper and I'm bullish on gold. How can I not be bullish on silver on either ground? But actually, in terms of macro thinking here, I actually think for once, Americans really need to pay more attention to Europe. Like we tend to think of Russia and China and their big geopolitical opponents, and fine. But the way the world is going, Europe has its own interests. And if we're going to tear the NATO treaty up and Europe could actually become a single state in the same way the 13 original colonies ended up becoming one national government, really. That could happen to Europe with, they've got a military threat on their doorstep. There is, if not panic, there is, a very serious effort of, we need to defend ourselves. And if America isn't going to do it, people are talking about budgets now and yeah, there's going to be defense spending and maybe European defense contractors and suppliers are a play right now. But I think that's just the near term. Like the big picture here is, what happens if the US and Europe get a divorce and they go their separate ways. I think this has market implications beyond defense contractors. It's certainly for our natural resources, but it has big market implications. This is a theme that I think investors of all stripes should be watching for.
So, about that, I just had a guest on, and that was we talked for over an hour just on that. And I absolutely think you're right. I think people do need to be paying attention to Europe. Especially in our field, I mean, natural resources, not that they have any, but there's a lot of implications with Ukraine and Russia.
Well, I mean, they do, but they've, like Americans, really, let the brown people somewhere else mine that stuff and
Yeah.
ruin the environment. But they have resources.
Yeah.
Uh,
They need,
and the key point is you really can't expect the U.S. and Europe to remain best BFF forever, right?
right.
And changes markets, that changes our specific markets and commodities and natural resources, but everything.
Mhm.
You need to think in terms of, as Brent Johnson is banging on this drum now, the dollar milkshake guy. You need to think in terms of global realpolitik here, and if long-term alliances are shifting, this has huge implications going forward.
Yes. Lobo Tiggre, independent speculator, big fan of your work. People want to find you. How do they go about doing that?
IndependentSpeculator.com. The easy ask here is I have a free weekly newsletter. If you sign up for that, we don't spam you with a flood of advertisements. You get one email per week. You can see how I think and see whether or not you like me on your team as your due diligence guy.
Yeah, appreciate that, Lobo. You often name drop both Rick and Doug as mentors of yours, and they are also mentors from afar for me. But you've also become a mentor of mine. I want to thank you for that. So,
Well, yeah, well, I'm just trying to give credit where due. Actually, I say something that sounds smart, but I didn't come up with it. Doug did. Well, actually, if it sounds smart, it's probably Rick. And if it sounds funny, it's probably Doug or snarky. But no, I owe them both a great deal. And it's part of my good fortune, I guess, that I've been able to learn from them and work with them and enjoy the benefit of their tutelage.
yeah, I would agree. I would include myself, my mindset in that as well. So, all right. Thanks, Lobo. We'll have you on again really soon.
Thank you, Andy. Take care.
Take care.